Hey crypto enthusiasts! This recent FOMC meeting, or the Federal Open Market Committee meeting, brought crucial updates for both traditional and crypto markets. Jerome Powell, the Federal Reserve Chair, made waves by announcing a pause in interest rate hikes. Now, he kept a hawkish tone, signaling a continued tight monetary policy, but here's the kicker. Historically, every time the Fed hits pause after a rate increase, it's like stepping onto an elevator that's headed straight down. Wall Street, always quick to read between the lines, saw through it. This second pause is a green light for significant interest rate decreases in the future. And with geopolitical tensions rising and an important US election on the horizon, you bet the money printer will be working overtime. When that happens, markets tend to favor risk-on assets. And you guessed it, cryptocurrencies fall into that category. In the intricate world of finance, where every word and decision carries weight, Wall Street has once again showcased its adeptness at reading between the lines. A recent development, marked by the Federal Reserve's announcement of a temporary pause in interest rate hikes, has sent ripples through the financial community. However, the seasoned players on Wall Street have seen beyond the surface, recognizing this pause as a precursor to significant interest rate decreases in the future. The second pause in interest rate hikes, as perceived by Wall Street, serves as a clear signal. It is seen as a green light for the Federal Reserve to embark on a trajectory of substantial interest rate decreases in the coming months. This interpretation underscores the nuanced understanding of economic cues by financial experts, who foresee a deliberate move toward more accommodative monetary policies. Amidst this economic shift, the global stage is set with geopolitical tensions on the rise. Additionally, an impending US election looms large on the horizon. In response to these complex and interconnected factors, the consensus is that the metaphorical money printer will be operating in overdrive. The reference to the money printer working overtime implies an anticipation of aggressive monetary measures, potentially including strategies like quantitative easing. Historically, when central banks engage in significant monetary expansion, markets tend to pivot toward risk-on assets. This is where cryptocurrencies come into play. Positioned squarely within the risk-on category, cryptocurrencies are poised to benefit from the expected surge in demand. Investors seeking higher returns often turn to riskier assets in times of economic shifts, and cryptocurrencies are increasingly being recognized as a viable choice. As Wall Street deciphers the subtle cues from the Federal Reserve, the stage is set for a recalibration of market dynamics. The anticipated interest rate decreases, coupled with geopolitical uncertainties and an approaching US election, form a complex backdrop. In this intricate dance of economic forces, cryptocurrencies emerge as potential frontrunners, offering investors an alternative avenue in the ever-evolving landscape of global finance. As we navigate these economic waters, the resilience and appeal of cryptocurrencies may become increasingly evident. So, let's not complicate things. It's not rocket science. It's cyclical and predictable. While unpredictable events like the pandemic or global conflicts can throw a curveball, most of the time, it's simpler than it seems. Now, one thing we tend to overthink in the crypto space is when to buy, hold, or sell. But fear not, we're demystifying that together. Welcome back to Key to Crypto, or KTC, and in this video, we'll explore a straightforward blueprint for your crypto investment strategy. Whether you're a seasoned pro or just getting started, this plan will make navigating the crypto market a breeze. Alright, keeping it simple, our first rule, channel your inner Spock. Emotional decisions will wreck your portfolio. If watching your investments swing from $100 to $10,000 to zero makes you queasy, crypto might not be your game. Remember, only invest what you can afford to lose in this speculative asset class. Altcoin trading is a zero-sum game, where we buy low from the scared and sell high to the FOMO-stricken. Turn off those emotions because, in the world of crypto, emotions about price actions can be your worst enemy. Let's dive into the details. Whether you're a veteran of multiple bull markets or diving into your first, it's crucial to acknowledge the leaps our tech has taken. With more historical data and advanced tools now at our disposal, there's a key tool we've been using since the last bull cycle, and today, we're diving into it. Valuable resources come at a cost. If we're serious about making money in the crypto game, Investing in knowledge and tools for an edge is a no-brainer. Remember, if something's free, you're often the product. In the crypto world, self-custody is key. Being your own bank demands top-notch security. Products like cold storage hardware wallets, encrypted emails, VPN services, and security apps play a crucial role. Now, onto the tool we're exploring today, the Moneyline, formerly known as the Bitcoin Strength Index Indicator. It's a powerful charting tool on TradingView, offering a blend of technical analysis and on-chain analytics. The Moneyline doesn't guarantee risk-free profits, but it increases our odds of success. This tool helps us know what to buy, when to hold, and when to sell. Vital in the zero-sum game of altcoin trading. We're in constant competition, and any advantage we can gain is gold. The Moneyline provides a unique perspective, helping us identify bullish and bearish trends early on. It assists in buying before a pump, holding without selling prematurely, and selling before a dump. Morales Money, by the way, is a fantastic platform that helps us discover newly created altcoins before they hit indexes like CoinGecko. They're rolling out features that automate our altcoin trading strategy soon, making life easier for us crypto enthusiasts. Let's now dive into reading the Moneyline and see it in action. The chart is straightforward. Green signals a bullish trend, red signals bearish, and yellow dots indicate a bullish flip. Buy on the flip, hold until it bears, and then sell. Simple, right? Check out its historical success with Bitcoin over past market cycles. Ready to master the Moneyline? Let's get started. But before we continue, if you like what you're watching so far, please leave a like, comment, and subscribe so you don't miss any of our uploads. Now, picture this. Back in May 2020, when Bitcoin flipped bullish, many sold in panic. If they followed the Moneyline, they'd have bought when everyone was scared, held during the fear, and sold when the frenzy hit. Same stories in 2017, 2013, and 2014. Now, let's shift to altcoins. Ethereum, as of September 18th, 2023, it flipped bearish. Watch for a break above $2,000 for a potential bullish trend. Solana turned bullish in January 2023, recently breaking the $1.40 resistance. Good entry, but stay bullish. Cardano flipped this week. Check if it breaks 40 cents for a potential buy. Dogecoin? Well, not the best vibe right now. Wait for an upward trend. Polkadot just went bullish. Watch if it clears $9, $10 resistance. Now, on to those altcoin gambles we discussed earlier. Thorchain turned bullish in August 2023, cleared $2 resistance, and is on a strong bullish trend. High probability it's a good time to buy and hold until a bearish flip. Remember, the Moneyline isn't a crystal ball, but it sure helps us make informed decisions. Alright, now let's dive into some altcoins using the Moneyline, our trusty companion in navigating the crypto market. First up, MELD, a recent token with limited data. Currently in a bearish trend, sideways mostly. If you're intrigued, better to wait and see if it turns bullish and breaks the 0.25 cent resistance. Moving on to Radix, still on a bearish trend, likely not the best entry point, a wait-and-see situation. Now, GameSwift, a very new project with limited data, but showing signs of an upward breakout. A bit of a gamble, so tread carefully. Lastly, Axelar, also new, in a bearish trend. Better to wait until it flips bullish, perhaps above the 0.60 resistance. For fun and a testament to the Moneyline's power, check out Terra Luna's chart before it collapsed. It flipped bearish on April 30th, and in just 6 days, a complete collapse. Imagine having a 6-day heads up. Here's our simple blueprint for trading altcoins. Check the Moneyline on TradingView. If it recently flipped bullish and broke a resistance, higher probability it's a good buy. When it turns bearish, consider selling or taking profits. If it's in a bearish trend, maybe skip it, or DCA if you're in it for the long haul. Get hands-on with the Moneyline. Test it on some altcoins during this bull cycle. And of course, secure those gains with a cold storage hardware wallet like Tangem. Their sleek black design is the latest, and their upcoming app update is packed with cool features. Like and subscribe for more crypto insights. Stay safe out there, and happy trading. That's it for now, and remember the future of finance is here with KTC.